Welcome back to the Big Announcement Coming Soon podcast. We're here with our 5th episode. David and Nick joining me today. And let's kick it off with some news, guys. Oh, wait. No, I'm supposed to be polite. How are you guys? Not straight into crypto, but social things. How is everybody?
Yeah. Good evening. Good. Thanks, Jeff.
Yeah, pretty good. You know, can't complain.
Good. Okay, so taking a quick look at a few news events from this week before we get to our articles. Beeple's Twitter was hacked, and if you follow the ZachBTC threads, and those are linked below, ZachBTC does great investigations into who's been doing these, and it seems like somebody who's been doing a lot of the hacking through Twitter with some kind of Twitter access has been doing this. So it's another one they hit. And Japan is now, I guess their prime minister saying they're embracing NFTs. They're doing awards for government officials and talking about, as governments do, we're talking about entering the metaverse. So I'm not sure where that's going, but it was interesting to see a country involved in those two. Nick, NFT thoughts on those two?
Yeah, I mean, for the space, you hate to see and hear about anyone getting hacked, let alone Beeple. But I think the article talks about how it happened on Twitter, and there are a lot of unverified accounts, bots, or just scammers working together in unison to,
Well, this is the whole,
ghost.
they take the entire account over.
Yeah, ghost the. Oh yeah, exactly. Ghost the account and. Yeah, phishing links are all out there. Discord as well. Discord is a home for scammers. We've seen that last time. But anyways, yeah, it's bad for the space. But on the flip side, what Japan's doing is really cool because again, for adoption, you're kind of moving beyond the monkey pictures, and the cartoon, and just looking at the value and utility of the token itself. So, but again, we have a long way to go because you're still going to scare people off when you hear about hacks and
Mm-hmm.
people don't like what they don't understand.
Yeah, your
So.
Employee of the Week recognition award gets hacked,
Yeah.
whereas I still have mine from 2003.
And that hack was, I think the positive side of that hack was, this is kind of the resolution of it because that hack happened same time as Biden and all those other people got hacked on Twitter and took over Beeple as well.
Oh,
And then it
this
was
was just
during
the
that
thread
period of
on it.
time.
Okay.
Yeah, well, yeah, it was during that period of time where he didn't have control that they sent out all these scams and then hacked a bunch of stuff. And so those, I think ZachBTC finally putting together who the person who did it is and harassing him in public is exactly what he to do.
Excellent. We all love Zach.
Mm.
SEC has gone ahead and said with proof of stake, everything in Ethereum, because most of the nodes are in the US, is now under their purview of control. And there's a great article linking to this because, of course, Gensler's saying this and everyone reacting is saying, well, I think the quote in the article is like a German company makes a German token to sell to German people. But because the nodes are 51% in America, Gensler decides he owns it and it's a security to protect American investors. Um, I just thought it was another interesting thing of as things keep changing, regulation keeps chasing it in a way to shut it down. Like the goal is to stop it and figure out a way to value capture for people in power, people in banks. And this looks like another way to continue to capture a little control, or at least try to. I think there's some good moves to push back on Gensler. In the last two, Credit Suisse, Justin Sun offered to buy them today, uh, which if you've been here long enough, very bullish. He'll pump it. But Credit Suisse is having a bit of a credit default swap moment. People were saying Lehman Brothers, then they were saying collapse, then it didn't, and now we're going to the moon. And right after this, the European Parliament, I think, passed, but then, of course, it says at the end of the article, needs to pass more signatures for what's called MiCA, which is stricter regulations on non-KYC'd wallets and a few other things. David, Europe, but I think you do business with Credit Suisse. How's all that been going?
Yeah, totally. Yeah, I mean it's pretty crazy. It was good. Luckily I owe them money rather than them owning my money, so that's good. Yeah, I have my home loan with them, but yeah, it was pretty awesome. Like I secured my home loan last year at 1.19% on the 10-year mortgage, and that's already at 3.2 or something, 3.6. So pretty stoked about that. But yeah, it's Credit Suisse.
This is in Switzerland, not in the States, for everybody thinking you have a crazy great mortgage rate.
Yeah, exactly. This one does it a little different. So yeah, I mean, I'm perfectly, comfortable buying back my loan at, 60 cents or 60 rappen as we say in Switzerland on the franc if they want to sell it to me. But Credit Suisse is not going under. They're over collateralized and all sorts of stuff. Basically, really what it is that Credit Suisse has been exposed as being very not good at doing their job over the last 2 years, just losing money left, right, and center, SoftBank, etc. But yeah, I mean, they have more collateral for than the Swiss government requires at 13%, and there's no way that the Swiss government or anyone would let Credit Suisse come down because it's kind of clutch. So I think it was a bit more of a like, oh crap, this is more serious than we thought moment. But then of course there's everything. This is way less serious than everyone's making out to be moment.
Yeah, it seemed to hype and die within the week or weekend. Right, Monday it was supposed to crash us all, and we're sitting here on Wednesday morning, and yesterday was up only, this morning's red, but like I think we're on to a news story. Right, Credit Suisse is fine. So MiCA, do you have to KYC everything in your life now, David?
No, not true, because I'm in Switzerland, so that's not Europe, at least on the law of this situation. So actually, once again, beautiful. Switzerland is so. Technically, no. Switzerland treats it more like your house, for example, is your castle. So, for example, like if you download pirated movies in your castle, that's okay because those were publicly available and you found them, and so it's yours. In America and Switzerland have a big chat about this and are very disappointed Switzerland's rule on that. But yeah, it's basically the finders keepers rule. So they kind of treat crypto the same way. There's no cap gains tax. Yeah, pretty good. So, but yeah, for Europe as a whole, definitely, I don't know. I actually am for regulation overall because, to be honest, I want to make more money, and like the more regulated stuff gets, more money comes into the space, and I think it kind of happen anyway. So like, if people have to like KYC their stuff, I mean, if you think about it, like a lot of this reasoning would be like, let's say, oh, okay, Russia needs a lot of money. There are Russian, friendly industries or Credit Suisse who has a lot of Russian deposits. Maybe they just, use some non-KYC wallets to like get those expatriated back to whatever it is. So like there's a lot of like, I don't know.
But you really think like MetaMask wallets, like you'd have to KYC all 12 MetaMask wallets? And
I think you would just KYC an initial MetaMask and then it would just list the wallets or something. And it probably would be like self-reporting. Europe tends to be less kind of strict, and it's kind of like your job is to report this, and if you didn't do it, then well, that's not good. Like in GDPR, for example, you can get fined $1 million, but like not really. Like actually, what happens is like they tell you to like fix your stuff and like. But yeah.
So you're not you think it sounds a lot less serious than some of crypto Twitter's blown it up to be?
I mean, it's probably pretty serious for the people who want like free, non-visible money, like the true believers of like the decentralized money movement kind of thing. But for people who kind of like believe that inevitably, it's kind of like, I guess like you think about like Gold Rush and like Deadwood existed out there in the middle of Montana or whatever it was, South Dakota. And, there were some rules, but not so many rules. And like some people could get rich and not, but you could also get killed. And then like the government came in and like made it like a nice, reasonable place to live. And there were some sacrifices. You couldn't like kill anyone and you couldn't get super rich. You couldn't die. And, so all the same kind of stuff is true of crypto markets. Like I think like just like, because we are like, I guess, hopefully relatively successful in our trading and things like that. I don't think it's really apparent how much destruction happens to other people to create that success. And regulation, as much as it's like, yeah, regulations, who's it going to protect? There's a lot of people who just shouldn't be trading crypto, if I'm honest. Like students, but
yeah, well, I think it's less there, and I'm more interested in the red tape and the headaches of every time I KYC something. I got the IRS on the phone the other day because logging into their third-party thing to pay them more money was too difficult. They wanted more KYC. The IRS did. I'm like, I just want to give you cash. So I did it on the phone and sent a paper check in. And the idea of Coinbase and FTX needing to know every single wallet, and you send in your ID and you can't get your MetaMask stuff transferred because it's and then you have 2 Terra wallets and a Cosmo wallet. And I just see it going down that rabbit hole of every time you hand somebody $5, does the government need to know? I mean, on an exchange where banks are involved, cash, fiat going into crypto, I can see the argument for the government being involved in KYC. But some personal accounts, I feel like it's just the red tape ends up making it unusable, and really we just need to use it like cash.
Exactly.
And they're not regulating cash very well for money laundering and black market activity.
Yeah, they could maybe like figure out a way to. I mean, maybe this is where Civic and Vinny Lingham's like vision comes finally to pass, where like you like have a KYC thing or a third party, and then that KYC tells all the different wallets, and so it's like MetaMask connects to your Civic to like feed your identity to it, and so it just becomes very seamless, and it's not like a huge issue.
Yeah. Well, that's
like,
the exact service I couldn't connect to the other day is one that does that.
yeah, but it's based in America though, right? I mean, Europe much more technologically savvy.
Okay. Let's jump into the stuff we brought today. I'm gonna kick off today with my article, and then David's got some looks at what a trader is, and Nick's gonna wrap up the big MoMA $70 million. We needed exit liquidity, and they're here to buy our bags, right?
Right.
So my article today is looking at Robinhood moving to Polygon, and I picked this up and then also picked up a lot of Robinhood stuff this week. There's a documentary on Netflix over the entire GameStop debacle, and I'm not going to go into all of that right now. I'm going to do 2 seconds. If you haven't seen the documentary on Netflix, it's worth going back. I'd followed this as it happened live, but it's still really interesting to see. I don't think they focus enough on the money market order flows, what Robinhood does as a business to make money off people, and how the CEO just kind of like took away the buy button and looked you in the eye and told you to get fucked. Like this soulless dude. At the time, one of the big issues was third-party settlement that does insurance. So between the trades that Robinhood does and Citadel's holding it, the people are just hitting right paper trades on the phone. There is actual settlement. It takes about 3 days, and there's insurance that you need on that. That was going through the roof as their excuse to start shutting things off, right? They had a service they couldn't provide, but they use this as the excuse. As they bring in Polygon as the back end, really Polygon fixes this, right? You're settled instantly. You don't need to worry about a third-party custody. So I started thinking, well, great. Robinhood has that addictive UX user interface. People love it. They like trading on it. If the blockchain's in the background, just like this third-party settlement company was in the background, they don't need to know, and they're going to use it. And it's one of these things we've seen for years being pitched, but blockchain's coming as use. Now, because they're using it and sending dollar stablecoins on it, doesn't mean the Polygon price goes up. That's a different security, and token price are different than daily use. But I thought this is how it's going to happen. It's not people getting MetaMask, signing private keys, jumping on Robinhood and hitting that green buy button, and then the blockchain runs. So you're using it, but it's behind the scenes. I think it solves that problem. But the other thing I thought of by the end of reading the article is, well, that's a lot of money in third-party custody waiting to fight. It's a lot of red tape that only, it exists to protect people, and now it exists to keep companies in business. And just like, right, the horse and buggy drivers fought the cars, and everybody who's established fights the new thing. By switching to Polygon, they saved themselves this whole issue. Well, now we have an entire industry who's ready to fight blockchain that didn't care maybe a year ago about fighting it. So I think it's worth, if you haven't seen the Robinhood GameStop thing, take a look at the documentary. I cannot remember what it's called. David, I'm sure you do.
I think it's called GameStop.
What's it called?
I think it's just GameStop. I think just straight up.
Oh, okay. But more so, this is one of the many instances. If people say, mass onboarding to blockchain, I don't think it's mass onboarding to a ledger and MetaMask. It's mass onboarding to a phone app. And a lot of the people who I've talked to who've come into crypto since 2020, always on their phone. They don't mind that their keys are on their phone. They don't mind that their wallet's on their phone, or that it's all third party. They've never thought about this. It's never been introduced to them as an issue. And if we have an app for it, that's how we can get to a couple billion users, not by evangelizing how to use ledgers and Trezors. So that's my thoughts on the article. It's down below. It's worth giving that a look, and please watch that documentary.
Yeah, totally. Well, that documentary is like, yeah, the Reddit crew, Wall Street Bets and everything, they're almost like cousins from another mother or whatever, but they had the wrong dream. Tried to fight the machine, who just walked away from it, played a different game, came to crypto.
Mm-hmm.
But yeah, no, I mean, I like two things on that is like Matic and Polygon running like, it's been impressive. I've been watching what they've been doing recently. Like they underpin the Reddit chain, I think, or whatever they're doing with their token. MoMA, someone else, yeah, like I don't know, but like a whole bunch of maybe something like that. Like they're doing a bunch of different things. What that means, I don't know. I'm not a technical person, but sounds good. But I mean, I think, yeah, exactly. I mean, the one that the I guess what we're discussing is essentially like if you have like back in the day, and Trace Meyer, I think it was, came up with it. Or like there's like Bitcoin like proof day, I forget what it's called, but basically you're supposed to take all your stuff off the exchanges.
Yeah.
Yeah, proof of keys, and then put it back on again to make sure the exchange has the
proof of funds, not your keys, not your coins. That's what it is. Proof of funds, I think.
Yeah, exactly. Yeah, and so that's essentially kind of what this is trying to fix. Is like we trust finance has all the money that we say it is, and because that's essentially what Robinhood and Binance are doing the same thing, right? Their order book, they know their order book, so they can just swap shares or tokens freely without it being on the blockchain, so therefore it doesn't cost a gas fee. And then they can make the money off that transaction. And so Robinhood payment to order flow is the same kind of idea, where you're essentially like taking the thing off of the main market and creating your own little mini market and taking the risk on yourself. And that's how the GameStop people punished them so hard, is because they didn't have the money backing the buys anymore. And like you said, the insurance blew out and whatever. So does Polygon solve for that? Is Robinhood doing it because of like a ethical reason? The documentary kind of paints Robinhood, and I also probably agree, is like they don't really care about anyone else.
Yeah, I think they don't want to pay the cost of the insurance. They're not ethical.
Interesting, yeah. So I mean, does blockchain just like solve irrespective of motive? Yeah, maybe. I mean, I think I don't know much about it, but it sounds pretty cool.
So I feel looking at the Robinhood money making model, right? They're the market maker with Citadel, and they're taking that order flow. If they can cut out the third party who holds the stock, it's just a fee reduction for them, even if they have to pay gas on Matic, and it happens instantly, but it doesn't affect their profit model.
And then the question will be like, what happens if they start like holding stuff back from the market, almost like a cartel? Where they're like, screw you, we're gonna like just price you at not the optimum rate that you're going to get to give us a little bit, and you'll never know because it's 3 cents more than 2 cents or whatever.
Yeah, you mean what they do? How they?
Yeah, well, exactly. Yeah. So like,
no fee trading means higher spread.
Screaming right now and be like, you're using blockchain to create a centralized evil, but I mean, like it will process lots of money, and Robinhood is exactly like that. That's the thing. It's like, yeah, Binance does that. You log on to Binance, like, where do I even start clicking? Whereas on Robinhood, it's like Duolingo for finance.
Yeah, for sure. And Jeff, like to your point, like the onboarding and the mass adoption, it's going to come when people aren't even aware that they're using it. But like you said, doesn't necessarily guarantee that the token's going to go up itself, like in value. I mean, I didn't realize it, but for months, once I switched banks over here in Thailand, I realized that my international transfers, if I scroll all the way down to the bottom, it just is sent by Ripple. It has a little Ripple logo underneath it. Not XRP, but it's sent by Ripple, And
well, that's XRP is the intermediate between it's a bank transfer, FTX. I mean, come
on. but just surprising that here I am sending money back to the U.S. to an American account from a Thai account, thanks to Ripple. And I think that it's not going to be one killer app, and it may not even be one killer collection of KYCs, but it could just be, I've already KYC'd to that bank, but now here I am just now, with all my information getting stored through Ripple's data. And I'm not even aware of it, right? So I think when we move into, again, like more mass adoption, these are going to be the trade-offs that we're going to have to make. from all sides, right? Exchange and investor.
Yeah.
Or user.
Yeah, I mean, it's like it's the analogy for me is kind of like Tron. It's kind of like, oh, Tron, whatever. I've used Tron to send money. Like, it's cheaper than Ethereum back in the day. So it's the same kind of thing. Maybe in the future you have your bank. You'd be like, okay, I want to send it Swift because it's a lot of money, and then I want to send it with one of these lesser ones, kind of almost like whatever it's called, Zelle or something like that. And you can send it across different blockchains, and they'll all be competing for use their network. Well, hopefully, that'd be cool.
Okay, so to have money to trade or to have crypto to trade, we got to be some kind of investor, some kind of trader. And David, that's what you're talking about this week.
Yeah, awesome. So exactly. Last time we kind of hit on the idea of like, cycles and getting into trading, and I kind of stepped back and realized like that applies definitely, but before you do that, you have to kind of choose what kind of trader you're going to be, because bottom line is like not most people, but like a significant portion of people can't do a 4-year cycle. It's just like not their personality. Like if you look at Baby Tips, if you look at Investopedia, if you look at any of their books, like they always end the type of trader sections with find what the best type of trading is for your personality and do what your strength is. And so like, if someone's like super, I don't know, ADHD and like, can't like, trade out longer than a week or whatever, then maybe they're a scalper, maybe they're a day trader. And if they focus on doing that, they get really good at it. That's their style. That's what they win at. Then great. For me, like, it's much more, I don't think I have edge to like look at order flow and figure out how to like, scalp money. And I also don't have the emotional ability to like hold on to a position that's underwater knowing it's about to like, or cut it when I like to have an idea, build on it, and then like plan it and then like watch it come to fruition. And I also think that like, if you're a beginner, you should always start that way. And maybe I just like started as a beginner and then just like became an expert beginner or something like that. But like, and anyway, so like the 4 types of trader that Baby Tips goes into, there are other sites that show this, but like, the scalper, the day trader, the swing trader, and the position trader. And essentially you're kind of moving up time scale. Like scalpers like on the like minute, 2 minute, 5 minute, hour chart. Day traders taking trades in the day, doesn't go overnight with them. Swing trader will take a trade and then like maybe wait a couple of weeks and sell it. And then position trader takes positions in the market. And that's kind of what our strategy is, in that we like, okay, over a period of time, there'll be an adoption cycle. It will wave up. And then if you sell somewhat around the top and then you like buy somewhat down the bottom, you may not get the thrill of 100x or like whatever it is, but over time you'll make significant money by taking those positions. And especially because if you're a scalper, you probably don't really believe in the asset that you're trading. You're just kind of like figure out levels and where they're going next, and you'll trade it all the way up and all the way down, and it doesn't really matter. But if you're a position trader, if you're like a true believer, then position trading is probably for you, because you're taking a position something you believe in, but just kind of doing it more smartly by timing it better, and using certain things. And so the reason you know all these things is that most people get into trading and they don't really think about this. They kind of just think trading is trading, and usually I'm going to buy this and it's going to go up a lot, and I'll just kind of hold it and it'll keep going up and it'll be great. But then as time goes on, they see like, oh, someone sold it at the top and it went down. I could have sold it at the top and bought it at the bottom. And then they're like, maybe I could be swing trading. And then
that was some trading, boys. That was some trading. Up quick 30 grand on CBS. That is how you trade. This game is so fucking unlike the genius. This guy. People have been doing this their whole life. I've been doing it 10 minutes. I'm doing it better than they ever dreamed up. 203. If I can do that, I make 22 million a year. Keep it up. I am rearranging the stock market's face. It's all about minimizing risk. You panic, masters of panic out there. Uh-oh. Happy learned how to putt. Uh-oh. Happy learned how to short some stocks and turn a quick 20K profit in 5 seconds. I'm smarter than the algorithms. I fucking hate my stockbroker. I hate fucking Stu Feiner. I hate fucking everybody. Don't fucking text me at the opening. Unbelievable. Lulu's down to 186. Do the math. I have nothing to say about Boeing. I can't get on the right side of Boeing. Boeing sucks. Stop touching Boeing. This is the lowest it's been for Davy Day Trade Global. It's a bloodbath. Down $500,000 in the second session. Oh, don't buy fucking, it'll go down. Fuck you, it will. How many top Wall Street firms can't get their computer to work? 3 minutes before this thing clicks open, I'm down $1 million. What the fuck's going on? I've lost my mind. I'm already.
And then they're like, maybe I could be swing trading, and then they try that for a bit. It doesn't really work out that much. Then they like double down. And they go to day trading. Like, I'm going to make it back quicker, and then they move to scalping, and they take leverage positions. And it's kind of like you're like swim in the area of the pool that you're ready for, but then also only kind of delve really into it once you figure out what you're going to be able to do. You're like, oh, position trader, that makes the most sense over time. In theory, it makes a lot of sense, but actually over time, very hard to stick to your position, especially like, if it's, I don't know, remember the COVID crash in March 2020 and Bitcoin went from like 14 to like 3. And a position trader doesn't care about that. They're like, it's okay, the asset's still going to go up, but like everybody else is just wiped out.
No shaking.
Yeah.
But you have to have a lot of belief for that. And a lot of people think they do, but then their coin is down a lot and suddenly all that belief's out the window. I saw a good I'll probably end on this, but a good quote from Ched today, and if I remember it, is like, if the conditions for why you took the trade have changed, why are you still in the trade? Something like that, or like if you're
that's
still
your
in the
reason
trade,
for exiting it.
That's your reason for exiting happened. Why are you still doing it? And then that's almost like the key point right there. That's where emotion hits. You made a decision. This was the parameters for that decision, and now you're changing your mind. Why? Not because of logic, because of emotion.
Yeah. Let me respond exactly to that, because I bought Doge this week. Not before the Elon stuff, or before I read it. I got on my phone, I was playing with the baby, bought, then realized it's up because of Elon. I was looking at a different tweet that showed the long term, and I was like, yeah, we were topped out at 70 cents. We're at 6. It might go to 3, it might go to 1. And I'll hold through that, but it's definitely going back to 30. So as I realized, oh crap, as a day trader, I didn't even look at enough news because I'm parenting. As a positional trader, I wasn't worried at all about buying yesterday's, probably the top. Because my exit plan wasn't this week and it wasn't 10 cents. It's, it's when we're all hyped up and people who don't know anything about the tech are buying Dogecoin, and great, then I'll sell it in a year or 2 or 3. But if I hadn't been doing this so long, I think yesterday would have been just kind of a kick in the pants of like, oh, do you just did something really dumb? I'm like, well, sort of.
Yeah. And oh, sorry, go ahead.
No, you go.
Well, I just think like what you said when you explained those cycles, or like almost like the psychological cycles that one goes through as a beginner trader or a noob. It is interesting because like I think everybody dabbles in one aspect or another, and until they really figure out where in the pool they're most comfortable, right? And then some people get to the point where they can't swim back. But I think like everybody goes through that where, like Jeff said, like you could look at Doge chart and you could have steady hands, or you could have been that person in 2017 December and bought the top and then sold it when immediately, or once it started going down, or held all the way. Like you never know. Like there's I don't know, there's levels to this, right? And we all figured it out over time in due course. And I think that's sooner or later we kind of stick to our thesis, and our thesis is also tied to our identity, and that kind of determines what kind of trader we are, right? With our risk tolerance and our patience, right? You touched on something, patience and discipline. You could go through all those cycles once or twice, but then remain in, the swing trader, day trader mode if you don't have something else, right? If you don't have the patience, if you don't have the long-term plan. So yeah.
And I wonder when you're coming into this, at what part of the cycle. So when we were talking to people over the last couple of years, and they would ask about crypto, and my response would be, well, yeah, I think it's still going up, and I bought a little bit of the super cycle hype. And they go, well, should I buy? And I was like, well, I bought, so long ago that whether we top out at 60 or 40, I was happy. But when you asked the question and Bitcoin's at 40K, my answer was, well, it's going up. Should you buy? Not a good time to buy. And they would kind of question that. I'm like, well, come back to me in like 2.5 years and we'll talk again. And that wasn't their time cycle. They wanted to know within the next 2 months when they should.
Yeah.
It's exactly right, because it's the risk reward. Like if you're looking at a risk reward, classical trading says say you could only take the risk if it's 3-to-1 odds that you're going to win it. Otherwise, the downside is not worth you taking that risk. So they kind of in the market, and it's a 50-50 whether it's going to keep going up, and we're already in, so we're already up a lot. So okay, we're just going to stay in. But their decision is not it's the person. Another example uses like poker players. Like if you want to be an excellent poker player and actually succeed, it's boring as hell, right? Like you sit there and you like don't take good hands and you fold and you whatever, and you just wear the other opponents out. Most people don't play poker for that reason. They come to play poker because they want to go all in and win the big all in. And when you win that, you feel great, and then you lose all your money. So it's like it's not a it's very much about psychology of like what's the decision you're trying. What is the goal you're trying to make? Are you trying to just have fun, or are you trying to make money?
Yeah, there's not a lot of moon boys that are position traders, like hit their style.
Yeah. And before we jump over to Nick for NFTs, what is the monitor to profit to time correlation? Because you said like over time you become a position trader, a scalp trader. When do you add the 32-inch monitor? When do you add the vertical monitor, the 6 monitors? When do you hook up your 72-inch OLED TV to trade better? What's that correlation?
Yeah, I guess I mean more people down the lower end would have lots of screens because they need all the information right now. But yeah, so position traders, you probably do it on your phone, and just use those screens for like entertainment purposes predominantly, and everyone else is just freaking out siliconing it.
Hell yeah! Hopefully, if you've been around a long time, you know what that reference is. Nick, what the fuck is MoMA doing with $70 million? They're selling to buy, right?
Yeah. Out goes the Picasso and in comes, I don't know what they're gonna get. Actually, it's a good question. But yeah, MoMA, the museum plans to sell 70 worth of their collection that they've had since they've had for a while, right? The founder's been holding it since he died in 1990, and part of that includes like a collection that a piece that we might know, Pablo Picasso's 1919 guitar on a table. But the big question here is, what do they buy? And also, does this legitimize NFTs? Or is this just like when you go to a museum and you see like the iPod next to the Walkman, next to the Discman? Are we just at the evolutionary stage where it needs to be included in it? What are you guys' thoughts on this, and is it good for adoption, or is it just a cash grab by MoMA?
Yeah, I like it. I mean, I saw Basel art gallery. One of them had like the tsunami in show, and they were selling like limited edition version of that, and I almost bought it, but it was so expensive. But yeah, I mean, I think it's cool. I think there's a lot of cash to be grabbed, so I can't complain. I mean, it's art after all, so it's in the eye of the beholder. But yeah, no, I'm kind of all for these experiments going and just seeing what happens. I hope they add stuff to them, like you were talking about last time with the metadata, where you can like change them and like, I don't know, oh, you bought this, you get free admittance to this special whatever,
Yeah.
So you're talking a little more that MoMA engaging in NFTs, not just MoMA buying Fidenzas and Beeples and art pieces, but David, you're kind of referencing if MoMA takes that first step and then starts engaging with their visitors with NFTs.
Yeah, maybe like, okay, we bought a Fidenza, so we're gonna have a Fidenza party. All the Fidenza people can come and like, appreciate our Fidenza and
And then maybe there's like an edition that's like the MoMA Fidenza collab, and they release it like, it could be not a manifold, it could be an open edition, or it could just be an auction, right? It's interesting because the article mentioned Super Rare and the physical gallery in Soho, New York. And Super Rare is the platform, obviously, where you just like Scarcity and Foundation, you can buy art directly from the artists. But yeah, I don't know. I never thought about it like that, but it leaves the door open for MoMA to be a platform in itself. Maybe down the line get a coin, down the line continue, like you said, to have that curation and collaboration, yeah, working between artists. So
Yeah, it's easy to do a curated by, sponsored by MoMA. I mean, we do curated rare Pepe sets, so we can do, MoMA and then do something pretentious sets.
Yeah, and you're seeing that. Like you're seeing sort of some of these platforms sort of like, I don't know, load up on different talent and and those certain artists tend to stick with certain platforms. A lot of like the foundation artists are all kind of, it's a tight knit community, right? And then you got the scarcity crew, which is like I don't know, it's just interesting to see kind of like not land grab, but like everyone is kind of like joining their tribe, and we're at the beginning of this. And I think MoMA, once in, it is always cringy when you see like the Web 2, Web 3 world interacting. It's a bit awkward, because but it's nice that again everybody continues to join the party.
But if it's anybody, MoMA is a museum I've always not loved when we go to New York, and not, there's other ones I like a lot more because they do weird stuff. They have odd displays. I have to look at unicycles, and that's not art if it's just a unicycle in the center of a room. But it's good for them to go out there and try the new thing first, and then we'll see if more kind of conservative classical art galleries follow along.
Yeah. What do you think? Like, what do you think their first purchase is, right? We've seen like others like Christie's and stuff get a punk. I mean, or do you think it is like something along the lines of we're just going to wait and release a collab together?
As the other VCs have shown us, you buy a few NFTs and then you launch your collection. But I think in all seriousness, MoMA would look at a few of the pieces that people know about. Fidenzas are the big one that have stayed around. A few of the things that came out around the time Fidenzas have faded away. And Beeple pieces, whether or not Beeple pieces are hot with NFT crowds or the appreciation of price crowds, I think Beeple's still the biggest name to everybody who's not in crypto. So that's an important first place to go, because they're looking to bridge that gap essentially between crypto and the people in there coming to their museum.
Yeah, absolutely. I agree.
I mean, I think because it's a museum, I wonder if they're going to look for like pieces that have like significance, like the first crypto kitty, or not the first, but like one of them or something like that, or you might see like interesting ones being picked up. But yeah, I wonder if it'll have a price effect on. Yeah, it'll be interesting. Maybe it'll be like McAfee's like launches, like what's MoMA's next. But I think it's actually really good that there's a place for real artists to exist right now to display their work. And have people, Zoomers and stuff, get excited about MoMA again, and like it being a generative place that stuff happens. I saw a great meme or a cartoon where it was like, so we shouldn't be accepting AI generated art. And then below it's like, yeah, I much prefer the real thing. And then like looking on the wall, it's like that banana taped to the wall.
Yeah, nice.
Awesome. Great catching up with you guys this week. I'll see you guys next week.
Yeah, thanks, guys. It was a pleasure. All right.
Enjoy.
Bye.